Welcome to my YouTube channel. If you are new, kindly like, subscribe, and share the video. Turn on the notification button so you get text to know each time I post a new video. So, a quick one. We're talking about fair value gaps, inequality, also called FVG as we may say. So, what are fair value gaps? So fair value gaps refers to areas on the price chart where there is a noticeable difference between the current price and its received price. So these fair value gaps, they typically occur when the price moves rapidly. Understand, they always occur when price moves out rapidly. Understand, leaving behind a space where little trading activity do take place. So, for instance, when the price experience a sharp increase or decrease, it creates a gap on the chart. This gap represents a zone where buyers or sellers don't have enough time to enter the market. So traders believe that the price will eventually return to these gaps to fill them as the market tends to what correct itself over the time. You understand? So traders often use fair value gaps to identify potential entry and what exit points when a price gap appears. So it can indicate that the asset is either overbought or oversold. You understand? So traders might look to enter a trade when the price approaches the gap again. You understand? So understanding fair value gaps can really assist traders in making more informed decisions based on what market behaviors. So a quick one without wasting much time. Fair value gaps. We have different types of fair value gap. We have the valid one and the what invalid fair value gaps. So without wasting much time, I'll be explaining the valid fair value gaps and the what invalid fair value gaps. So moving over to the charts, first of all, we want to see three qualities of a fair value gap. So the first quality is, let me write it down. So the first quality of a fair value gap is what? Three-dimensional order flow. We want to see a three-dimensional order flow. The second quality is it must react to an order block, okay, it must react to another block should be the second quality of the valid fair value gap. This should be number 2. Okay, so number 3, so this has to do with when you are going to what enter the trade. You have to watch out. So the candle closure, that is the candle that is going to fill that fair value gap, should close above the fair value gap. That's for the what? It should close above. That is for the what? Bullish scenario. That's for the what? Bullish scenario. While vice versa, the bearish scenario, the candle should what? Close lower. Okay, it is clear. So these are what it should be, what three-dimensional order flow. It must react to an order block. Sorry. It must what? React to an order block, and what? Candle closure should close above the fair value gap. That's for the bullish scenario. You understand? So the bearish scenario, the candle should what? Close lower from the fair value gap, lower. So we don't want to see price closing above the fair value gap or above the shelf. So it must also have a shelf. I will explain what a shelf means. It must also have a shelf. Okay. So it must also have a shelf. Now I'll be explaining what is a shelf. A shelf is simply the previous swing high before a bullish fair value gap, or the previous swing low before a bearish fair value gap. So that's basically a shelf. So you want to be seeing a shelf on the fair value gap. You want to be seeing a three-dimensional order flow. What I mean by three-dimensional order flow is that once the if you are reacting to a bearish fair value gap, you want to see the first candle before the candle that formed before the candle that caused the fair value gap. It should be a bearish scenario. The three candles should be bearish. The first candle, the fair value gap candle, and the continuation candle. The three of them should be both bearish. If it is for the bullish candle, you want to see the three of them to be what? Bullish. You understand? So it must what? React to an order block. You want to see a fair value gap either moving from an order block or moving what to an order block. So you want to see a fair value gap close to an order block. That's the more those types of fair value gap are more what likely to work out. So candle closure should what close above the fair value gap. That is for the bullish scenario, and but to close below the fair value gap if it should be a bearish scenario, and it must also have a shelf. I'll be explaining that on the chart. So this is a chart on GBP USD. This is a chart on GBP USD. As you can see, you can spot a three-dimensional order flow here, which is this was the bearish fair value gap. Automatically, this fair value gap has all the details. It has all it takes. It's a valid fair value gap because firstly, this was the fair value gap area. Most traders mark out the whole candle, but I choose to use just the fair value gap area. So this is a three-dimensional order flow. Remember, for a bearish scenario, you want to see the first candle, which is this, the second candle, and the third candle to be what? Bearish, giving us a what? Three-dimension order flow. So this is a three-dimension order flow. This was the previous swing low. This was the previous swing low before the candle that caused the what? Fair value gap. So automatically, this area is the shelf. This area is the shelf. So let me write it down. This area is the what? Is the shelf. I believe you are seeing it clearly. So this area is the shelf. This is the shelf. Okay, I believe that is noted. So this is a what? Valid fair value gap. It's reacting to an order block. Remember, there is an order block at this area. Okay, it's reacting to another block. First confirmation, three-dimensional order flow. Second confirmation, it has a shelf. Third confirmation. You understand? So this is a what? Valid fair value gap. And the fourth confirmation, as you can see, the candle that what filled the fair value gap closed lower. Look at the candle. This was the very candle that filled the fair value gap. You can see it didn't close above the shelf. You can see it closed lower before what a little bit of retracement, taking out the swing high and what closing lower, indicating for a bearish sign. You understand? So this is a very clean fair value gap. You could have taken this trade, you put your sell limit order here, SL above the very candle that caused the fair value gap. Always put your stop loss at the very candle that caused the fair value gap. So this is a bearish scenario. You understand? This is a bearish scenario. So mind you, one thing I would like you to take note is that most times you don't use limit orders for fair value gap as it's very risky in most cases. So how I do is I watch the market. I watch because I want to see a slow move to the fair value gap. I don't want wherever a situation whereby market will be moving fast to react to a fair value gap. So it's very risky. You understand? Sometimes price will break through that, and so you get stopped out. So in this advice, I would like to advise that what you watch the market. You want to see a slow and steady move to the fair value gap area, reacting to it. Once the candle that fills it close lower, you can enter for a sell position. That's for the best scenario. The stop loss above the very candle that caused what fair value gap.
So that's for the first confirmation that we need to see to validate a fair value gap. So let's go to the bullish scenario. Remember, these are A plus. So let's go to the bullish scenario. So this is a bullish scenario. This is a bullish scenario. As you can see, it's a three-dimensional flow. Remember, three-dimensional flow. If it's bullish, you want to see what three bullish candles. This was the first candle. You can see second candle and the third candle. Remember, it's reacting to an order block. This is a valid order block located at this area. It's a three-dimensional order flow, which is what 1, 2, and 3. Remember? So this is the area for the inefficiency. This is the area for the inefficiency. Now you can see it also what has a shelf. This was the previous sell high. This area, this was the previous sell high. You can see it right here. This was the shelf for the bullish scenario. So this is what an A plus setup for a buy. Remember, not all fair value gaps do work, but believe me, if you can filter this out, it works most of the time. At least you want to see at least three um, three possibilities. You want to see what three keynotes. You want to get hold of at least three of these confirmations for you to be sure of what you are trading. So at least it should be three-dimensional order flow, should be reacting to an order block, and it should what be having a shelf. You understand? So know what you are trading as. So in this case, you can see, unfortunately, this is not a three-dimensional order block, but it's reacting to an order block. It has a shelf. You can see, and the candle that was filled the fair value gap. Look at the candle closure. It's not closing what above the swing low. You can see this starting of the fair value gap. It's not closing above. Price filled it and closed lower. As you can see, what happened? It was a sell. This one has three confirmations. At least three confirmations for you to be what? Sure of what you are trading. As you can see, price retraced back to this place, filled the fair value gap, and what? Continue selling. So if you can put your SL above the very candle that caused the fair value gap. For example, we can enter for a sell at this area, and stop loss. Stop loss should be what above this very candle that caused the fair value gap. As you can see, targeting the next what external liquidity or next window. As you can see, this will be a very clean and fair trade. So that's that for fair value gaps. So let me show you the invalid fair value gaps. The invalid fair value gaps. You wouldn't want to be trading this type of fair value gaps. Now, what you want to watch out for to validate a fair value gap, we'll continue that on our next episode. So watch out for the next video. I'll be telling you about what not to trade, the fair value gaps you are not to trade, what disqualifies the fair value gap, what makes it what invalid. Remember, we talked about the valid ones, things that would validate it. You want to see at least three confirmations. The four confirmations in total. You want to see a three-dimensional order flow. You want to see price reacting to that fair value gap and what closing either below or higher, depending on the scenario, either bullish or bearish. You want to see it reacting to another block, you want to see a short. You understand? So these are the four confirmations. At least make sure three are available before you can trade. Remember, the goal is to be what profitable. You are not to gamble. You understand? So in our next episode, we'll be talking about types of fair value gap, the invalid ones, the one you are not to trade. Please watch out for that. I'll be explaining a lot on that video, and you can actually take at least 1 minute of your time, subscribe to my YouTube channel. You can turn on the notification button, so you'll be the first to get notified each time I post a new video. So thanks for your time. See you in the next video.